Oh, hey, it's Ray. I know that I've talked a lot about mortgages and FICO, credit scores, but today I wanted to talk a little bit about the other end of the spectrum. You know, the things that most people equate with credit cards. Did you know that there are different types of credit cards out there? It's true. And today I'm going to be talking about two different kinds: variable rate credit cards and fixed rate credit cards. If you've never heard of them, that's totally okay. I honestly don't really expect you to. Most people have probably only heard of one of them in the first place. I'll talk more on that in a little bit. The first thing you should know is that the only difference between variable rate credit cards and fixed rate credit cards is interest. Yes, just like any other type of loan, for example, home or auto, credit cards have interest rates too. Interest is the way that lenders profit and make money off of issuing loans to borrowers like everyday people, you and me. It's usually shown as a percentage rate. For example, you might see a credit card advertised for a 23.99% APR, or you might even see a credit card advertised for a low 0% introductory rate. Lenders will use the interest rate to calculate how much you should pay on the principal balance owed. With the most popular types of fixed loans, like home or auto loans that come in installments, the interest is wrapped up into your monthly payment. With revolving loans, like credit cards, the interest is actually usually just added to your credit card balance, waiting for you to pay it off. While it is true that creditors' minimum monthly payments factor in interest, different lenders have different terms and methods of calculations to determine exactly what your minimum monthly payment should be. And it turns out, unfortunately, for many people, they make the minimum monthly payment and then they find out that it barely covers the interest that was charged to their card for that month, leaving them in a never-ending cycle of debt. Unfortunately, this is just becoming more and more common, and interest rates are partially to blame. You see, the higher the interest rate on your card, the more of your money is going to go towards interest instead of actually paying off the principal balance of your loan. Likewise, the lower your interest rate, the more you pay towards your principal balance and the faster you pay off your loan. With that said, there's actually something really important that you should know before applying for your first credit card. This will actually make life a little bit easier for you if you ever find yourself in a tough spot needing to carry a balance on a credit card. There are two kinds of interest rates: fixed rate and variable rate. So it's no big surprise that lenders really like to make money. They also like to mitigate their risks. They like to stay in control and call the shots. Lenders use variable interest rates to accomplish this, and that's why the large majority of credit cards you'll see on the market today only offer variable rates. Variable rates are exactly what they sound like. They change. Lenders who write variable rates into their terms have the right to change rates on you at any given time. Your rates could go up or they could go down, and this could happen over and over again as often as your lender wants. This means that if a lender sees that you've been using your card responsibly over time, it's possible they could actually lower your interest rate and your bills could get a lot easier to pay. It also means that at any given moment, your lender could increase your interest rate and your bills could get a lot harder to pay. But with a fixed rate, that's not the case. It's basically the exact opposite of a variable rate. When lenders write fixed rates into their terms, it means that the interest rate that you receive when you open your account is going to stay the same for years, decades even. Although there's usually a clause in the terms that state lenders can change the terms themselves at any given time, lenders generally stay true to their word and keep fixed rates fixed. This can be a really good thing, especially if you were able to get a really low interest rate when you opened your account. For instance, when I was 19 years old, I opened up a fixed rate credit card with my local credit union. They issued me the lowest rate available at the time, 10.5%. Now I know what you're thinking. She must be really old. I don't think that I'm that old yet, because it's only been 12 years, and after that 12 years, my interest rate has stayed exactly the same. It's never gone up and it's never gone down. It has stayed at 10.5%. Now, my variable rate credit cards, that's not what happened? All but one of them have increased in their interest rate over time, and it didn't matter what my credit score was, it still went up. The single outlier from my variable rate term cards, it did decrease by 2%. Locking in that low fixed rate and the predictability of it can really help you if you ever find yourself in a tough spot needing to finance instead of paying cash. I think we can all relate to that a little bit. Unfortunately, fixed rate cards are notoriously hard to find. Lenders don't like to issue or hand out fixed rate cards because they just don't have as much control over them. It's really just not in their best interest because it's just so much more riskier for them because they don't have the control. They just don't have the same freedom to raise interest rates and increase profits if they need to or want to. So if the seemingly mythical fixed rate credit card is so hard to find, then where exactly do we find them? Do they even exist anymore? Yes, they do exist. I promise. Though they are few and far between. Many people recommend searching for credit cards on popular sites like NerdWallet. That is an awesome idea if you are dipping your toes into the idea of churning credit cards, or even if you're looking for a specific rewards benefit. But if you're searching for fixed rate credit cards, you may be disappointed to see that your search turns up little to no results. That's because the lenders that offer these cards are usually much, much smaller banks and organizations. So start off your search by looking small and looking locally. Look at your local credit union or your local small bank. In this particular case, you might find that the smaller the organization, the better your chances are of actually finding a fixed rate credit card. Bear in mind though that small credit unions just don't have the same funding as their competitors, and they may struggle to keep up with their competitors technology-wise. These credit unions may be a little more old school than you're used to. They may not have the flashiest new phone app to compete with the large institutions, but they compete where it counts by giving you the lowest rate possible with the best terms possible. It's all about priorities, right? Bottom line, if you're trying to pay off revolving credit card debt with a balance transfer, or if you're looking to finance a large purchase with a credit card instead of a traditional loan, then your only concern should be the interest rate. Be sure to keep your priorities straight. Don't get distracted by all the fancy and flashy credit card rewards and benefits that all the big lenders offer, or any rewards for that matter. Steer clear of variable rate credit cards if you can. Do find a low fixed rate credit card at your small bank or local credit union. It's not an easy search, but you will probably find one that meets your needs. If you found this video helpful, or if you've learned something new today, go ahead and give this video a like and subscribe. On this channel, I really like to talk about personal finances, how to manage them, and ways to improve them over time. I really believe that this is one of the most important life skills that people need, yet it has fallen to the wayside in recent generations. I plan to share more tips and tricks on credit and finance in future videos. But until then, what parts of personal finance do you struggle with? Let me know in the comments below. I'll see you next time.